Hi, this is Larry McMillan with the market update, Monday, November 25th, before the market opens. The S&P 500 continues to make new all-time highs or be very close to new all-time highs, and that's positive. I mean, the basic essential here is that the chart has higher highs and higher lows. Moving averages are all trending higher. The Bollinger Band's moving higher, so those are all positive things. There are some overbought conditions that are appearing, and while overbought does not mean sell, some of them are becoming just a bit worrisome. For example, equity-only put-call ratios have dropped to extremely low levels. There's been a lot of call buying in the last month since this rally started in early October, and both the weighted ratio and the standard ratio are down to levels that we haven't really seen since very early, like January of 2018. The market, of course, will continue higher as long as these ratios continue to decline. But if they roll over and begin to drift upwards, trend upwards, then that would be a major sell signal. We already have sell signals from market breadth. It just hasn't been that strong in recent weeks, and the little pullback that we had in the last week or so did give us a sell signal from our breadth oscillators. Cumulative advanced decline line has also not been able to make new all-time highs here recently, although it's not a long ways away from doing so. So that's the most negative area that we're looking at right now. But another positive is volatility, VIX in particular. VIX is at low levels, so by that definition, it's overbought, but it can stay overbought for a long time. If VIX is just drifting sideways at low levels, the market in the past has been able to rise quite a bit sometimes. So here we'd only be concerned for the strength of the market if VIX were to close above its 200-day moving average. Essentially, for simplicity purposes, we'll just say that's 16. So if VIX closed above 16, we'd have a problem. But right now, to summarize it out, we have a positive S&P chart. We have VIX in a positive situation, and those two things together are a pretty powerful combination. We've got a negative breadth, and that's a bit of a problem, and we have put-call ratios that are extremely overbought. But until the put-call ratios roll over to a sell signal, I don't really see a problem here. The period between Thanksgiving and Christmas is normally seasonally positive. Of course, it was not last year in 2018. And it's a bit unclear whether seasonality is going to be all that strong since we're already up quite a bit. But in the end of 2017 and the beginning of 2018, we rose very strongly in an overbought market during the seasonally positive period. So while it seems like perhaps it's time to lighten up a little bit, I would say you could roll your calls up to higher strikes. You could tighten up your trailing stops, but I wouldn't really take too much money off the table in terms of upside potential, and I certainly wouldn't short this market until we have more confirmed sell signals. I'd also like to invite everyone to visit optionstrategist.com. We have a set of newsletters that we publish where we go over all these indicators daily and also make recommendations based on them, of course. And we also have a series of Saturday seminars. We just concluded the first one this past Saturday, which include not only education and market comment, but question and answer sessions as well.